I'm 30 years old and I quit my full-time job to be a day trader. I'm going to be trading for 10 hours a day. Here's what I'm going to be doing. So I was trading the Asia session this morning. We were rejecting from this 4-hour fair value gap, but also trading into this 4-hour fair value gap. That's why sometimes I don't like marking out my high time frame FVGs. I just find it creates too much noise and it strips my confidence of knowing what the bias is. So let me know your approach to what your thoughts would be. I took a loss on this 1-minute inversion. I then changed my bias and took a short after we filled this 5-minute fair value gap and we created this 30-second inversion. I ended up catching 4.2R on this trade and I closed it literally on the perfect candle, which I was pretty happy with. I finished $521 for the day and I was in some drawdown, but I'm currently $200 above my 50K account with Lucid. Now for the rest of the day, I'm going to be backtesting the 30-second and the 1-minute time frame. For example, the trade I took today, there was a 30-second inversion. There was no 1-minute inversion, whereas on this reversal, we had a 1-minute inversion and we also had a 30-second inversion. So I'm basically just going to be backtesting whether it is a good idea to have both or whether I will be more or less profitable just going off the 1 time frame inversion. I usually do all of my back testing manually, but now I'm going to be doing everything digitally on a Google Doc, and then I'm going to be moving everything over to TradeZella. This month hasn't been going too well. Later I'm going to be trading the London session. That was me for today. Follow to see how I get on.